have here a distinguished panel. I'd like to introduce the members shortly. Prinz Michael of Liechtenstein, he is here for Industrie and Finanzkontor establishment. I don't know whether of Kontor there exists an English translation, but very welcome. Then we have Maria Cavalcanti. She's here for FIRST. This is an impact investment fund, but she is very knowledgeable from her career in impact investing and international affairs. Then we have also from Brazil, Antonio Emírio Moraes Neto. He is from Vox Capital, who is the family fund of the Votorantim family. We have Andreas Kirchschläger. He is an old hand here at this university. He's director of elea Foundation, also of Max Schmidheine Foundation, and he was running for many years the International Student Conference here at the University of St. Gallen. And we have also Wolfgang Reichenberger, who was for a number of years the CFO of Nestle and now involved with Inventages, which is a venture capital fund. Is it a fund? Myself, I'm a lawyer. I taught for many years law at this university, but I'm also, fortunately, a member of the Swiss-Brazilian Lehman Foundation. And we are running big education projects in Brazil. Now, impact investing. That's not, it's not an easy concept, and I talked to Antoinette Hunziker, who studied at this university, was head of the Swiss Exchange, and is now running a company, Forma Futura. I said, Antoinette, what is impact investment? She said a few words, but then she said, we are not doing impact investment, but we are investing with impact. So I was a bit puzzled, and therefore I would like to ask the members of this panel what for them individually impact investment means, and then we might compare, and we might also find certain differences or possibilities, you know, to go over certain borders which at first do not seem to be possible to overstep. May I maybe just go along the line, if I may, that Andreas, that you would start telling us what is impact investing.
Actually, I like the question of what you pointed out about the different interpretations of what impact investing really means. For us at elea Foundation, it means that we invest into entrepreneurial structures with a focus on the impact of the company as well as on the financial performance. And that we take the financial performance of the company as guarantee and underlying bottom line for the impact it creates. And actually, I think it's obvious that any company, any entrepreneurial setting creates an impact. The question what kind of impact and whether this external effect is positive, negative, and whether it's just a byproduct or whether it's intentional. And I would say for us, impact investing, it really means we look at the impact as intentionally created positive external effect of our investing process. That's what we understand with impact investing.
Prince Michael, may I ask you the same question?
Yeah, I would rather agree with Antoinette Hunziker, and would like to come also back to the role of an entrepreneur in an entrepreneurial family. And I think we get to the impact investing if we take a long-term view. And most entrepreneurs who start, they don't start to make a maximum of money. Well, they have to be profitable to survive, but they have an idea that they want to achieve something. And I think you have, with every good entrepreneurial activity, you have a very strong and positive impact, because you have all the stakeholders around who are profiting. So I would go rather along with this definition, investing with impact.
Interesting.
That's great. I think I'm pretty much aligned with both of you. I would just add that the Global Impact Investing Network has created their own definition, and I think most of the investors are using this definition, so I believe it's important to say Rockefeller Foundation and JP Morgan, with all the written reports that they have, they basically define impact investing as any investment that are actively, intentionally pursuing social or environmental impact beyond financial returns. So it's basically you are measuring your success not only by financial metrics, but also by social or environmental impact. So basic one, I think the image that I like a lot is actually we have two images. The wrong one would be, think about one axis, and here you have non-profit activities, and here you have for-profit ventures. And impact investing is in the middle. What we see in this concept is that you need to see in two dimensions, because it is possible, as we've seen during the whole conference, many examples that you can have interesting financial returns and social impact at the same time when it is embedded in the business model. So if I was to leave you with one image, is this two-axis dimension of impact investing.
Thank you. First, I wanted to thank you for having me back here. It's always a pleasure to be at St. Gallen. I very much agree with Antonio. We come from the same school, I would say, in terms of impact investing. One of the things that I would like to expand on it is the proactivity aspect of impact investing. We come from social responsible investment, which was more of a negative screening of companies. And impact investing goes beyond on actually coming in with a more proactive approach and investing in companies that you already know will have an external positive impact. So this externality is something that is very common on the economic perspective, but we're now looking proactively to this positive externality. And the last piece to add as well is this intrinsic values that are connected. So the idea, and I very much agree with Antonio, that we're looking into this combination of returns. It's because one is not at the cost of the other. So it's not because you are looking for positive and substantial or robust financial returns that you will then do less socially or towards the environment. It's actually the opposite. So there are new models, there are new ways for us to, the more you do, the more positive impact you generate, the more revenues you can generate. And that's the new way, and those are the new models, business model that we want to see, and that's what we see. And the last piece that I actually get asked quite a bit about the definition that the Gene and JP Morgan and Rockefeller Foundation put together some years ago, in 2008, is with regards to the intentionality, because sometimes intentionality is seen as a subjective component of this definition. But if you are, for example, like me, an investor that is looking into an investment, and you talk about the intentionality of that entrepreneur, the reason that it is important is because you're going to be investing in that entrepreneur, because usually you invest on the entrepreneur, not necessarily on the business idea. And that entrepreneur will have to really have the intentionality of looking for positive impact. And that company will have to absorb that as part of their core strategy, because that's going to focus the entire body, not just the leadership, but the entire body that works with that company throughout its own life, and it will impact anything from where they're going to grow, how they're going to grow, and how they're going to be sold to the next owner. So all of that is important, and so in that perspective, I think intentionality is very important as well. So I think we're in agreement, and that's how we see it, at least in first.
But then I have to give a different view. No. I think I'm a beginner in impact investment. I had a long, pure capitalistic career, and only the last 2-3 years really discovered the wonders of impact investment, particularly through also my involvement with High Scale. But I think I came from 2 areas. I mean, first, my wife and myself, we went often to Haiti, which is very close to the Bahamas where we live, after the earthquake, helping them, and then we were helping a school, or 2 schools even there, with, you know, donations, and some of them, you know, significant donations, and so on. But we saw the moment we stop or reduce donation or want to give someone else, it became a big problem. So I was looking for a different solution which is more sustainable, for those places, particularly also to create jobs. And obviously, from rather giving donation, it was, I think, the solution, even for a poor and disorganized place like Haiti, is impact investment finally, and I've made 2 investments there in the meantime. So that's probably one way to get to it. No? And the other one is a bit also from what you said, Maria, is to find entrepreneurs, and sometimes these entrepreneurs don't even know the word impact investment. I think none of the 5 companies I've been talking to, they knew about impact investment, but these people, when you look in their eyes or you discuss with them, they want to achieve it, they want to do it, they want to do something also for the country, but they want to also create a living for them and their family. So that is then also, these are you invest in entrepreneurs, you don't have to call it impact investment from the beginning, but of course you as co-investor, that's also, I've changed probably also one of my companies from a more, in Brazil, from a more mainstream focus to bringing more impact in, but it was easy to sell. I mean, it has to be already in the genes of those entrepreneurs. I think that's maybe the other way. That you come from the kind of philanthropic donation side or from the entrepreneur, but both lead you to the same impact investment.
Is this so-called double dividend, the impact, social dividend, and a financial return? Is this financial return really a necessity of impact investing? Or could one also say cost control, excellent organization, best people, maybe self-sustaining to an extent that you can pay people working for you, but no dividend, no payout? What would your reaction be to such a concept?
I personally, I really feel you have to drive for profit. Yeah? Because if you drive for break even, you will be loss-making ultimately. I'm definitely sure. If you drive for profit, you may have maybe a difficult time at the beginning, but you may become break even, and eventually, I think about it. If from the beginning, you drive only for break even, or so I think that's my opinion.
I accept this.
If I can build on it. If I can just build on this, I think it's important to think about, it is impact investing, and both words are very important. The investment part of it is very important as well. And it's because if it's not, and I very much agree with Wolfgang, because if it's not, then it will not attract the large masses of capital, will not bring in capital in large quantity. And if we do become a niche, then we will not really make a difference. And it will be always that very specialized, small type of business activities, but not become a way of doing business, a way that most companies would then see that they are responsible to not only return shareholder increase shareholder wealth, but also increase the planet and its people's wealth. So I think it's important for us to really think as an investment, so we then can attract the larger critical mass of investors. Otherwise, it will not really come.
Andreas, we all agree that education has a great impact in the development in any economy. But is it possible to realize a dividend, a payback in educational projects?
I would say, to take this direct example, there might be certain aspects of education where you can create a business model which actually works and creates profit, and there impact investing might work. But I think you pointed a very important issue. If we talk about impact investing, we should be realistic. It's not in our opinion, it's not a solution for every problem we face on Earth. I mean, what is interesting with impact investing, I think, is that there are a lot of problems, a lot of challenges, which in the past we tried to address through charity, through governmental involvement, but if you look at it, we could solve them with very interesting, stable entrepreneurial models as well. And my approach would be to go, it's a Swiss approach actually, with a subsidiary process. If it's possible to solve something with a market-oriented, positive entrepreneurial model, we should choose that way for the reason Maria mentioned, we need the capital. I mean, we have such big challenges around the world, we can't solve it by charity money. But we have to accept that there are others where it's impossible. You mentioned education, certain aspects of education I think you will never solve with a market-oriented model. And there we then should focus, is it the job, the duty of governments? Is it the duty of society? Is it something NGOs can do, charity organizations can do? And at the moment I see there's still a huge field of challenges we could address with market-oriented models. And then we have to find ways, be it full focus for profit from the very beginning. As for the question of profitability or not, I would choose the two perspectives. First, the one of the company who is actually creating the impact. Is the company able to survive without profit? No. So my answer there would be, there is an absolute need for profitability. Sometimes it needs time. I really like what you pointed out. Patience is a very important issue, talking about impact investing sometimes, but you need profitability. If you take the position of the investor, I think we really should focus on the expectations we create. And this is where I'm a little critical with the hype we have at the moment. We should be clear from the very beginning. Impact investing, sometimes you need patience. Sometimes you need a lot of capital to achieve the first successes. But at the very end, you should be able to create profits, which then either the investor can reinvest into the company or even take as a personal gain. And so I think we need to take these two perspectives if we think about what are good models for a certain case.
Maria, could you give up, you'd like to say, please? Please.
A brief intervention. I think first question, why to do impact investing? For me personally, very related to my purpose. That in my case, I found out when I was 16. And for me personally, it's very related to reducing social inequalities in the world. I think maybe you've seen this, this data from Oxfam that basically the 85 richest people in the world, they concentrate, or maybe I should say, we concentrate more wealth than the bottom 3.5 billion people. So thinking about this huge problem, I think we need a solution, a tool that can go, that can really go to scale. And I believe that the best weapon or tool that we have for this in the history is business, talking about the scalability. But a new type of business, because then we need to put a new kind of mindset, as we were talking about, different metric for success. And just to put things on perspective in this matter of creating an industry to provide social and environmental impact, I think maybe you saw this data, we have around 380 funds doing impact investing in the world, around $40 billion. But if we compare to the total assets under management, this is 0.008%. So the comparison that I do is, if the total assets under management were the Burj Khalifa, the tallest building in the world, there in Dubai, I don't know if you have seen it, it's gigantic, like 830 meters. Impact investing would be the size of this table here, 40 centimeters. But this is a huge opportunity for us to really change, to prove with examples, with real examples, that it's possible to combine both worlds and inspire others in the Burj Khalifa to follow as well.
Thank you. We have heard and seen very interesting examples of investing in agriculture, in forming cooperatives of independent farmers. But could you give us a few other examples, successes, challenges, maybe also of impact investing?
Absolutely. I primarily invest in companies, growth companies, that address the needs of the low-income population in Brazil, with basic needs and products. So we're looking into education, we're looking into housing, financial services, we're looking into health, for example. And in terms of companies that can, we saw today a few companies here that were very successful in addressing some of the needs of the community as well as making money. But for example, I'm looking into right now, one of my pipeline companies is one of the largest dental chain of providers in Latin America. This is a woman entrepreneur, which I like very much because we need more variety and different ways of answering the same problems over and over. And it's a woman that decided that the dental care in Brazil is not covered by the government. So if you have very limited resources, it's very hard to get dental care in Brazil. And as you know, dental care, if it's not attended to, can create medical problems as well. What she saw was an opportunity to create very high-end clinics within the slums in Brazil. And there is such a paradigm on that, because these are clinics that are very well appointed. These are clinics that have at least 9 types of different dentistry practices. So if you go to a doctor today, to a dentist today, you go to one day, they tell you to go take X-rays, the other one go text you another dentist for a root canal. If you are a poor person and you don't have the time, if you're not working, you don't receive, because you are usually informal employee. So if you are leaving time to go to different dentists all the time, you end up not really gaining and losing anywhere from 10 to 15 days per treatment of work. So that's money that you don't get. So people, even if they had that, they don't go because they can't afford to miss work, so they don't lose money. So what she did was something very different, and she has everything in the same place. She also saw that people didn't have transportation to get to some of this, so she has little buses that go around. So everything is done in that place. So this today, these are 197 clinics, 2.2 million patients, which is almost a third of the Swiss population, and it's about 100 million reais in revenues. And the client base is extremely dedicated on having a word-of-mouth referral, because they see the difference in their lives. So that's one of the cases that I see that it can really make a difference. It's wonderful returns, and it's something that is very important for us to have, because I think you're absolutely right, Andreas. There are some things that the market is there as a tool to resolve, other things that will not be for the market, other things will be for the government or for the civil society. There are challenges in which we see a mission drift. Some of my companies that I've been working with pipelines, they start seeing that they can upsell, and they then lose that commitment, that intention of working with solving a problem, because they see. So there is a challenge. There's a challenge on really measuring, or sometimes measuring too much. Sometimes we spend so much time, and we demand so much that the entrepreneur measures everything, that the entrepreneur doesn't have the time to run the business and actually do it well. So there's different challenges. And then one of the challenges that we actually talked about here is that this is a nascent industry. So we call triple bottom line, we call impact investment, we call social entrepreneurship. So there's a lot of names, a lot of definitions for this new movement that we are creating. And it's too early, so it will still be a little bit volatile and moving. So.
Will you maybe add a few words to this from a more distant point?
Yeah, maybe yes. I can say to one thing. I think there is a lot more investment in impact investments than you said, because I think most of the people who do impact investments, they don't know that they do it, so it doesn't go into the statistics. So I think there is quite some more. And on the other thing, what you said, I think on certain things one needs some sort of public-private partnerships or issues of civil society. And if we see, for instance, in India they have a very corrupt education system. The state education system is really lousy. And there are a lot of teachers who start as entrepreneurs, and they have private schools for poor people. And people pay there for the children to go there, and you know, they pay maybe 50 US cents per half year, but it's a lot of money for them. They go there. And so the teacher can live, and they have to be superior in the system because they compete. When I think in Hyderabad, I don't have the thing, I think there are 6,000 or 7,000 such schools just in Hyderabad. So there is something which develops, which is also some sort of an area where some impact investment could be needed.
Differences to venture capital investment. If you take his thesis, that much more investment is causing impacts than people think of the impacts. They might think of the returns, but good returns you make is good projects, and the good projects are usually also socially useful projects. But how would you differentiate? Is it the profit criteria?
Yeah, I mean, for typically traditional venture capital, you have people, I mean, I invest in the biotech space, so you have scientists that are driven by the will, of course, to improve health, and so on. You may say that's obviously also, you know, creates impact in society if you find a new solution for cancer or for Alzheimer or something. Yeah? But these people are clearly driven to make millions and to become filthy rich, you know, with what they have did. You know, there's no doubt, because I see that in the conversations that we have with all.
Impact investing would not be their field.
I think, well, there are many learnings, obviously, and what I personally also learned is that the discipline in corporate governance, because what we also impose in venture capital, I mean, we should impose the same in impact investment, you know, in terms of the whole corporate governance, in audits, in budgets, in, you know, the whole structure. And I think this is something I see in companies where impact investments where I come later, that this is very often missing. And I think this discipline is needed, particularly if you want to then attract larger investors. So.
In private equity, I have seen and learned that maybe 1 out of 10 projects is picking up and paying for all the rest. Is impact investing, is this also a feasible number, or would you not allow such a high number of failures?
I think it's even more dramatic.
Dramatic?
Yeah, because even in private equity, usually you have like 100 projects that you screen for each investment that you make. And then from out of 10 investments, maybe 1 or 2 will have a good hit. For example, in Vox, we started in 2009, so 6 years. We've screened 1,500 companies, and we've made 17 investments. So it's more or less the 1% investment ratio. From these, we have 5 exits so far. So with an initial 12% IRR, and within the convertible debt portfolio, we have 2 lines of investment, equity and convertible debt. So out of the 8 investments we've done here, we have 5 exits. And because of the risk profile of equity investments that is higher, out of the 9, we're having the first exit right now. And this will be like around 200% IRR. But is not going still to pay the whole fund, the other investments, so probably we'll need still another exit to compensate for the other investments that we've made. The target IRR that we're seeking, it's inflation plus 6% in Brazil. That would be around, right now, like 13%. And one important distinction that we've done in Vox that I think it's important to say, regarding these 2 axes, we decided for the performance fees of the fund to be both related to financial returns and also social impact. So I believe that if you're truly honest about doing impact investing, you should be incentivized not only by financial returns, but also by social impact. It's a minor part of the funds that are doing this, but I see it is a trend, especially from institutional investors, from family offices, they are demanding right now from fund managers to have this kind of structure. So this is something that I incentivize you to think about in your own practice and investments.
Is it difficult to find, you know, a joint mindset or to create joint mindset in families? Or is this a process? It's maybe a very personal question. You can say, I'm not able to answer to this.
Yeah.
But it's interesting, you know, because there are different ideas and very often, you know, I see in succession, then family unity is not of so much value for a certain time. Might come back. But how would you say, how could one create a joint doctrine in a family to go for this impact investment?
Maybe very quickly,
Yes.
I started Vox Capital with 2 partners, and the first investment was a foundation, so linked with a family. And then now we have 35 family offices and ultra high net worth people from Brazil. Around 4% of Brazil's GDP invest in the fund, and my own family is only 3% of the fund. What I see is that we've done like some research, and those families are investing 0.36% of their liquid assets. And what I see is that there's still the 2 traditional pockets. So if I want to earn money, I'm investing in hedge funds, in venture capital, fixed income. And if I want to do good, I'm doing philanthropy. So
Fixed income might pay you something in Brazil, but not in Switzerland.
yes, that's true. In Brazil, it's still a business. And so I think it's slowly coming together, these 2 pockets, but it is still a small part of the total assets. There's another international research that family offices are investing 17%. Those that are already doing impact investing, 17%.
How much? 17.
17.
17.
Yeah, yeah. So Brazil, I think it's picking up.
It's coming up. There is a new movement now in the U.S. and in Europe, primarily in the Netherlands. Now, what we see in it's family offices coming up with 100%. Making a commitment to put 100% of their net worth in impact investing, but some of that will take a long time. Last week we had a meeting with family offices in the Netherlands, and some of the families see that transition may take up to 10 years. But at least there is this awareness of putting your money in your mouth at the same place. The challenge that we see in Brazil is that it's still very early, and some of the families are now picking up with that idea that they can be more active on the market and not so much on the more traditional philanthropic space.
But in the average, what percentage of the assets you would think that families are investing in impact investment?
So what I gathered last week is this: about 30% of family offices are now getting some point or some part of their wealth is being committed.
And what part? Some part.
Some part, yeah. And what we saw was that of the 100%. It's still a small point. It's less than 5% of the families. But this is a movement that started about 2 years ago, and it started with 6 families in the U.S., and now they have 99 families. So it's growing, and it's not something that is immediately going to happen overnight. And also foundations are joining. So there's a lot of foundations that have programmed money towards impact investing, but their endowment is being invested on the traditional space. So these foundations are now moving those monies towards also impact. And then the third movement that I see is a movement called Disinvest Invest, which now it's a very large movement, and it's foundations and family offices disinvesting from any oil investments and then investing back either on environmental, alternative energy, or social. And that has been picking up a lot of movement, including large foundations like the Rockefeller Brothers funds, there's a lot of impact, a lot of movement behind it. So slowly we see that the family offices are coming up. My experience in the past has been that the family office have a little bit more agility on making the decisions, and then other investors follow.
From a European point of view?
Yeah, because you had asked first about the family unity. Can the family, not the family office, but can the family decide it? And I think it's a question that will vary from family to family, but I think it is easier when a family has the education and tradition to see that wealth is a responsibility. It's not an entitlement, it's a responsibility. Private wealth is important, it's a responsibility, and we have to use it in a responsible way. If this attitude is there, there's already less infight in the family, and then they might also find the right solutions for investing. I'm still coming back to this definition of impact investing. I wouldn't try to define it too much like, for instance, the Rockefeller Foundation, because there are a lot of other important things which might not fall into this definition. And I think it is great, because if we start to define more, with every sort of compliance thing, we get a cast of priests who define what is good and bad. And I think the biggest danger which impact investing has now, that this sort of priests of impact investing will come into place and direct it in just a few directions.
Andreas, you reacted very much to the recent interventions. What's your opinion?
I think it's very important the numbers Antonio gave us, especially about how difficult it is to select good investment opportunities. And I think this is one, I think you mentioned afterwards, Maria, that if we see the global investment universe, still a small portion of wealth goes into defined impact investing. But I think their patience is needed as well, because we need to create more opportunities to invest. And I would really go for a step-by-step approach there, because with every investment which either does not reach the financial expectations or the impact expectations, and I think there we have a double challenge. You can have investments which perform quite well financially, but you see that the impact you expected does just not happen. Or you have a great impact story, but there is no financial basis to sustain it over the long time. So I think we need to have more experience how to combine this. We have to solve questions like, is there really a trade-off between impact and financial success? Or do we find more examples where good impact sustains the financial success? Was same topic for valuation. When we exit, we see a lot of examples at the moment where we have a discount because it's an impact-oriented company. We need to create an idea, and therefore good examples, and I like the examples you mentioned, where we have an add-on because it's a positive impact and because we can define the impact and we can measure it. And so there's still a lot of homework to be done, and I just want to say it's true, there are still large buildings in the world compared to this table with the number of money which flows in, but on the other side there is still a lot to be done to really create these good companies, or to motivate existing good companies to focus more on the question, what could be a defined positive external effect for our company we like to stress out more, we like to focus on more to attract additional investment capital.
I can add something?
Yes, please.
I think, agreeing with your point, Michel, I think there's this risk of two major risks for impact investing. One, the concept being too loose, and then everything fits in it. And the other one, as you said, defining everything is outside is not, so we're not investing in this because it's not good. And underlying this, I think there's this risk of traditional institutions that are not motivated really for social impact, that start using the concept to leverage more funds, to have positioning with the clients, and really by the end of the day, like 30 years from now, we'll look back and nothing has really changed. We're just doing business as usual. And I think there's the major risk that impact investment right now they have. And the point of the metrics, the social impact metrics, is one of the most important ones. So we are supposed to really measure it and really make decisions differently, because otherwise it's just business as usual, and
that's why I like
just a waste of time.
Idea about incentivizing companies and investors by the impact as well. And with elea we created one concept to measure it and to bring it down on 2 pages, like the financial metrics. You can see the impact metrics. We have it audited by an external auditor every year, and it's only one try. There are a lot of others, but I think it's a process we all have to invest in, because at the end of the day, the investor wants to know that's the financial return, and he doesn't want to read a book with 300 pages and nice pictures and stories. He wants to see on 2 pages as well. Okay, and that's the social return of my investment. And there we have to create, I think, in the long run, like we have financial auditing rules and standards. We need standards for the impact side of the investments as well.
We get a bit short of time, maybe we move to the last point. A question from a lawyer. Is the state an impediment, a difficulty, an obstacle, an impact investment, organization-wise, fund law, tax law? What would you think about this aspect? Is the state, you know, you talked about public-private partnership. I fully agree. But if we limit ourselves for the time being to private initiative, investing, impact investing, is the state of any help or rather not?
It depends on where we're talking about.
Provocative question.
Yeah, as in principle, I would say that we are ahead of the curve, and regulation is not there where we are with the movement.
But if I think of fund law in Switzerland, you know, I got through a microcredit fund, which was hell of a work only making people understand the concept. It got through at the end, and I became a hero. But there are major obstacles in this field.
That's what I want
also,
to say.
supervision of foundations. Huh? That's also a question.
Supervision, then the whole issue of taxes. Is it social money? Is it is it money which does public good? Is it money?
Must profit not be taxed? You know?
Can profit be socially valuable? All these, and I think there we are always ahead of the curve, and regulation comes behind. And I think it depends on different countries whether the authorities are willing
let's move fast. Let's move fast.
I may also say, let's stay ahead of the curve also in the sense we call certain investment impact investment, and there is no regulation today. There's some academic work there. But please, I mean, if we in the industry, we sell then certain investments which have a, so impact, and only some people are getting rich with it, no? I think we can do a lot of damage, and then we will get a regulation. So I fully agree. Let's stay ahead of the curve. Let's keep it self-regulated, but let's be honest.
I would say,
sorry, there was a question. I'm sorry, I was not.
I just have a burning question. So my name is Falco Petzold. I'm at Harvard University, and we're setting up a new program focused exactly on a barrier that we think we have identified. I'd like to have your view on this. So one thing that we see is that next-gen members of ultra-affluent families, so family members that are between 25 and 35, are usually quite interested in impact investing, but they don't have the weight yet in their families to position impact investing within their families. So we're developing a course where we bring those ultra-affluent next-gens together, and we help them to position impact investing more in their families. So we work there with Antonio, of course. And the key question that we always have are to the panel: what are the dynamics that you experience in such families that come up between next-gen members and older members in the families? What are the dynamics that come up and that are a barrier for impact investing within those families? And what are the strategies to overcome those barriers? Because that's something we have to teach the next-gens in our program.
Thank you very much. I suggest that this university also starts a course, Impact Investing. You are coming for a key lecture. But we are still stuck with the state. You wanted to say something?
So my experience, I have three family offices that are investors, and we were very fortunate the family had already, the three families had already a very tight alignment about what they wanted to do. So by the time we got to them, they, at least for us, it was transparent, the interest of working with a low-income population. And I didn't experience or saw some of this potential conflict. So, but maybe we were lucky in that case.
So we have to come to a close. I hope you have experienced something, nascent industry, a lot to learn, impact investing, investing with impact, about the profit in this, a few doubts, but also clear affirmative statements, go for profit. Then examples, agriculture, health, I haven't heard more so far. I have read about other examples, but the role of the state is ambiguous. One possibility is public-private partnership, but for all the rest, let's remain ahead of the curve, and maybe the state will come later, but then we have already found a new concept, you know, investing into the future or something like. Thank you very much for your attention. Thank you very much to the panelists.